Millions lost for an unfathomable and rarely spoken about reason. Misconceptions that are so deeply embedded, even in top flight companies, that they often go unrecognized in accounting and accounts payable. Today, I'm going to expose 8 such costly lies many organizations sadly still believe about their accounts payable function. And the last one, it will blow your mind because hundreds of thousands, if not millions of dollars are lost right off the bottom line thanks to that misconception. We're going to talk about these 8 problematic viewpoints, the resulting worst practices, the associated costs, and most importantly, how you can fix each of these. Make sure you stick around until the end because the last one, as I said, is a real doozy. And even if you don't believe it, there are probably those on your organization's management team that do. Okay, let's get started. You think politics and accounts payable are worlds apart? One has nothing to do with the other? Think again. Misconception number 1. Politics have no impact on how your accounting and accounts payable function operates. Nice in theory, but the reality is something quite different. In the last few months alone, we've seen executive orders about the use of paper checks by federal agencies, including the IRS, by the way, the enforcement of the Foreign Corrupt Practices Act, and we know coming down the pike is the expiration of the deductibility and hence a potential change in expense reimbursement rules that were enacted as part of the Tax Cut and Jobs Act at the end of 2017. These are set to expire at the end of 2025. Worst practice, not monitoring the political arena for changes likely to require a change in your practices or policy. Associated costs, potential fines and penalties. In an extreme case, jail time for executives. If, for example, the violation of the Foreign Corrupt Practices Act was egregious enough. Also, bad publicity for your organization. And that's priceless, as you know. The fix. Keep an eye on the IRS news releases and executive orders. Also, periodically review the state treasurer's websites for any states where you do business. Now, if you want us to investigate this topic of politics and accounts payable in a little bit more detail, let us know in the comments below. Think duplicate payments don't happen that much anymore? Or they're always caught? What if I told you that some of your vendors are actively hiding them from you? Misconception number 2. Suppliers automatically return duplicate payments. Now, let's be fair, a few of them do, but the large majority don't. Of the group that doesn't return them, most, but definitely not all, and emphasis on not all, will issue a credit. Even if the credit is issued, it has to get into the right hands and not get lost or filed in purchasing or accounts payable by somebody who doesn't really understand what it is. And the processor who gets the credit must recognize it and handle it correctly. A good portion of the group that doesn't issue a credit or return the duplicate payment will, by the way, go out of their way to hide the credit from you. They either won't send a vendor statement, even if you ask for it, or if they do, they will suppress the credit on the statement so it only shows outstanding invoices. Worst practice, doing nothing, assuming it will all work out. Guess what? It won't. Associated costs, whatever the duplicate payments are, can be millions depending upon the size of your organization and how good your processes are. The fix, your own analysis of payment data and statement audit. And once you discover an organization playing games of this type, add them to the list of suppliers whose invoices are always double checked. Now here's another hard truth, which I've kind of alluded to. Not every supplier is ethical. And the biggest offenders, usually not the ones that you suspect. What's worse, some suppliers are gaming the system and your accounts payable department is the mark. Misconception number 3, all suppliers are honorable. Any mistakes that do occur regarding duplicate or erroneous payments are all the fault of your accounts payable department. As you can probably guess from this misconception, some of your suppliers are not honorable, but to varying degrees. And all the mistakes are definitely not the fault of your accounts payable department. If the above wasn't insulting enough, there's more. A few suppliers will go out of their way to try and trick your accounts payable team into paying them twice. Don't assume that you know who they are. You probably don't. And when you find them, you're going to be very surprised. Worst practice. Don't do thorough duplicate payment checking because this is one of the first signs that you have an issue. Associated costs, whatever the duplicate payments are. Again, it can be millions depending upon the size of your organization. The fix, your own analysis of payment data and statements audit. And as with other game players, once you discover an organization playing this type of game, you want to make sure that you check everything related to any payments you make to them very, very closely. Misconception number 4. As long as the manager knows about the latest frauds, you don't need to educate your accounts payable staff on the nuances of fraud and new frauds. Just the basics should be enough. Be aware that the preponderance of new frauds are focused directly on tricking your accounts payable staff. Worst practice, not immediately updating the staff anytime there is a new fraud. Associated costs. Again, it could be in the millions. The fix. It's critical that everyone is kept up to date on new frauds and protection protocols. Everyone. Before we get to the misconceptions related to automation, and there are a few, if any of this is resonating with you, please let us know by hitting the like button. And of course, I love to see your comments in the comments section. If you think automation is going to let you downsize your accounts payable staff immediately, watch the next part carefully. It could cost you millions. Misconception number 5. If you automate, you can get rid of your AP staff immediately. Automation doesn't mean that you can get rid of your entire AP staff. It means that certain tasks have been made a little bit easier. And yes, eventually you might be able to transfer some of your staff to work on more value-added work, but it takes a while to A, get up to speed, B, to get all your suppliers to use the solution. What's more, in an issue rarely talked about, the workload in the accounts payable departments has been increasing, mainly due to increased fraud attempts, which require additional verifications to make sure you're not being targeted, and increased regulatory reporting requirements. Worst practice, letting staff go before the solution has been fully implemented and without any consideration to the increased work requirements in other related areas. Associated costs. If a fraud slips through, potentially millions can go out the door. Likewise, if a duplicate payment slips through, we can be talking hundreds of thousands of dollars, if not more. And if your suppliers get annoyed or worse, the reputational damage to your organization is priceless. The fix. Understand both what it will take to implement an automation solution despite what the service provider might claim, and come to a realistic understanding of the additional work due to regulatory requirements and new fraud protections being heaped on your accounts payable staff. Misconception number 6. With the current administration in the federal government, our regulatory requirements are going to diminish, and we should need fewer staff. This may or may not be accurate on the federal level, only time will tell, but it completely overlooks what is going on at the state level. Most states are instituting their own 1099 reporting requirements, many of which are different from the federal requirement. Worst practice, thinking that because your state is enrolled in the combined federal-state reporting program, you won't be impacted. As already alluded to, many states have different requirements, so participation doesn't get you off the hook, and a number of states have left the program. Also, even if the reporting requirements are reduced under the current administration, we don't know what will happen after the midterm elections and a few years after that. Associated costs. The fines for non-compliance are only the start. The cost of getting into compliance once authorities have found you non-compliant can be horrendous. The fix. Keep the staff that has historical knowledge of your organization and its reporting requirements. And of course, I can't say this enough, stay on top of new state requirements as well as the federal ones. Distrust costs more than it saves. It's time to rebuild the bridge between your leadership, your management, and your AP team. Misconception number 7. If we don't watch our accounts payable staff all the time, they'll all slack off and nothing will get done. Now, to be fair, management says, at some organizations says this about other departments as well. It's part of the rationale being used in some organizations to force everyone back to the office and to limit remote work. Most employees, regardless of their profession, I'm not just talking about accounts payable and accounting, are dedicated and work hard. Proof, at least for the accounts payable function, is that when the pandemic hit, most of the teams were able to take the AP function home and keep the company running. And as I said, the same can be said for other departments. I don't want to make it seem like I think accounts payable folks are much better than everyone else. Okay, but yes, there are a few bad apples, and they're the ones who seem to get all the press, and they seem to have tainted it for everyone. Worst practice, not recognizing the value most employees bring to the table. When people are treated as though they can't be trusted, morale suffers, and they don't put themselves out. They put in the minimum required to get the job done. Associated costs, incalculable. Poor morale results in increased turnover and decreased productivity and a decrease in customer satisfaction. The fix, work to fix damaged relations between the staff and management. Misconception number 8, the accounts payable staff are just paper pushers. This is probably the biggest misconception of them all. The accounts payable staff handles a myriad of tasks on top of processing invoices. And when it comes to processing invoices, they're not all accurate, and finding and resolving discrepancies requires both analytical and diplomatic skills. What's more, the U.S. is finally moving away from paper checks. The AP staff in almost every organization is working to both convince suppliers to accept electronic payments and getting them set up accurately. This is not an easy task and one that needs to be done efficiently. That's why we put together a guide to help both the accounts payable staff and the rest of your organization become familiar with ACH. If you want to make sure your organization does it correctly, click on the link that has appeared on your YouTube screen and is in the description. Good luck.